And welcome to another segment of Above or Beyond Reasoning. Today, my special guest is Mrs. Maria McIntosh Robinson. She's the CEO of First Global Bank, and her association with First Global Bank goes back to 5 years, and she has been doing a phenomenal job there. Now, today, Mariam is going to be talking to me about the banking sector, in particular her institution, and how they have been weathering the storm and looking forward to the future as we all navigate this thing called COVID-19. So far, we have looked at entertainment, we have looked at manufacturing, tourism, and today we are focusing the spotlight on banking. Now, Mariam, how have you been doing and your institution since mid-March, when we were all told that, hey, we have to start working from home and this invisible enemy is upon us?
Yeah, so first of all, thanks for having me. It's great to be here. Good to see you, Sandra, and thanks for the work that you're doing. As it relates to the banking sector, always happy to talk about the banking sector and First Global Bank in particular. Since COVID hit in the middle of March, well, first of all, I want to say that we knew it was coming. So we had started preparing with our business continuity plan, should it hit. And so when it hit, it was more about pressing play on the plan. The two things that have really affected us when it first started, the first thing was around how do we ensure that all of our team members are safe? Usually here safety is a priority when you talk about the manufacturing industry or some of these really kind of high risk construction industry. You'll see safety is our priority. But quite frankly, during COVID, and we're still in it, safety is the #1 priority for our team members and our customers. And so it was really figuring out how to manage this health risk, which involved allowing people not to come into the office, to work remotely, to work from home. And because we are a bank, we stay open. I mean, when banks close, that you're in a real problem as a country. You don't want to send off the wrong signals to the population, and you want to make sure we're supporting our customers. So we have to stay open, but we have to do it in a safe way. So we put in hand sanitizers, the wall dispensers, we had sanitizers for everyone. We have shields for persons. We didn't have it on day one, but we certainly have it now. And so that whole work from home model and how do we in office protect the safety of our customers and team members was one big area that we'd started to plan, but once we got into COVID, had to execute. The second big area is with our customers, so immediately we got together and put in place relief measures for our customers. And the relief measures range anywhere from a timing standpoint, 3 to 6 months, from a structuring standpoint, a moratorium on interest payments to actually a moratorium on principal payments to actually a full payment holiday, right? And so those measures, we put it for each of our segments. For products that fell outside of that, got that approved quickly through our various approval levels, and in parallel talking to our customers. So we just started calling. We actually implemented a program within a week into the crisis called like a entry program, where we were going to call all our customers, not just our corporate and our SMEs, all retail customers, and just say, hey, we're just checking in. Because when good times, when it's the good times, we're here for you, but also in times banks have to partner with their customers. I always like to tell people we're not in the banking business, we're in the customer service business. And because of the role that banks play in any economy, certainly when we're going through a crisis, we have to displace a particular level of leadership to kind of steer the ship and keep I don't want to call it the vibe, but keep people feeling calm and people feeling like we have things under control. Because you don't you want to create unnecessary, unintended consequences far beyond the crisis that we're actually in. So we put in place relief measures. This is across the sector. The entire sector got together. As heads of banks, we communicate very often. And one of the things that's really good that even before COVID hit, in the banking sector, all the leaders of the banks have a very good relationship, good rapport, good communication. We're all still competing with each other. So we're very clear on that. But we communicate well, and where we can continue to grow the sector and how the sector relates to customers and how the sector is perceived in Jamaica. And I do recognize we still have more work to do. I would take that seriously. So those are the two big things that stood out immediately as COVID hit.
Okay. Did you find that customers were readily adapting to digital channels? Even persons who would always want, I have to come into the bank, I must see my banker, and I need to come and say hello to my bank manager. How do you find that your clients have been adapting to the digital channels that most banks would have been rolling out or would have had before, but maybe the uptake was
Right.
at the level that you would have wanted?
Right. So those two effects I was talking about, the first one, which is around the safety of our team members and our customers, what we then started to do differently was to migrate our customers to digital channels. So we reduced opening hours, of course, because we said, listen, there are a number of transactions that can be done online. And so for those of you who have accounts, but you don't even have online banking or a mobile app, we actually staffed up our customer care center just to walk people through who like to come in and see us as to how to set these things up. The response from the customers actually has been good, very strong, because especially in the early days, I think we're learning how to live with COVID now, but I think in the early days, people were so scared and concerned, me. It was really easy to keep people out of the branches. No one really wanted to come. They could do it another way. And so the goal, actually, we staffed up the call center to facilitate that. The other thing that it really says to us, though, Sandra, is that, you know, the entire sector has been pushing migration to digital. Digital is more efficient, it's more cost effective. We certainly can address the fees. You don't attract fees.
Definitely.
Right? Exactly. No, I hear you. We hear you. You know, but it's slow. It's very hard to change behavior if you do things a certain way. If you like to write checks on your checkbook and pay somebody, it's really hard to tell people, why are you ordering another checkbook? You don't need to. But when coronavirus, which only spreads from human to human, right? A physical carrier, you have to have another person beside you to catch it. That became that burning platform to kind of accelerate that migration. And that has been very helpful and very useful. So digital migration has been one key thing we've done differently. But I wanted to mention a second key thing. And I think everybody has gone through this in their own way, quite honestly. COVID-19 is what I would like to characterize as one of the greatest social crises in this century. And I know we're only 20 years into the century, right? So more may come. But it is really one of those true, just life-changing moments that we're going through, and we're still going through it. So it's hard to get a full appreciation for what it is the impact will be. But I think it's touched all of us. And I think it's very hard to sit in COVID and not think about how are you operating? What is your purpose? How are you helping the next person beside you? Companies, that's really around that triple bottom line: people, profit, which we all do very well, the profit and the people, but the purpose, like what is our goal? And First Global Bank, for instance, and the sector has been pushing on financial inclusion before this. But this is driven by the government's national strategy around financial inclusion, with the Bank of Jamaica as the key implementer, on behalf of the government. And so First Global Bank started this about in late 2017. And as soon as COVID hit, I remember talking to my group CEO, and I was like, you know what? There's an opportunity here. The government is doing a care program. We need to see how we can get the ones who are not going through bank accounts to get them into the banking system.
And you have capitalized on that.
Yeah, I mean, it's funny. So we were already doing agency banking. I feel very strongly that everyone should be given the opportunity for access. If you choose not to, that's okay. But in our country where we have a lot of inequality, access is so important. It's a personal value principle for me. So to be able to take something like a traditional sector that's been around forever, like banking, and be able to realize how we can improve the environment by just allowing access to bank accounts was just it just was a no-brainer for us. So I saw that the government was already doing diligence on a number of customers, and these customers who don't have bank accounts were to choose their remittance companies to receive the cash. And the largest remittance company is a sister company of First Global Bank, members of the Grace Kennedy Group. Immediately we're like, how do we get this done? And you know, we didn't expect that the demand would be so overwhelming. We had over 11,000 applications for bank accounts. We thought that we would have to be begging people. We have to explain what is the bad benefit of a bank account, but so many wanted. And we probably, you know, there's demand we did not meet. And, you know, if there are people who say, do you make money on these accounts? And it's so funny because the first thing that goes to my mind when someone asks that, I'm very, very profit driven and very target driven and results oriented. But the first thing that goes to my mind when somebody says you make money on these accounts is that I think they just don't get it. You know, they just don't get it. This is not about making money in the first instance. This is about, as a banking sector, it is good for the sector, it's good for the country, it's good for that individual to have access and to come into the formal sector. When you're in the banking sector, you know, you get access to savings products, you get access to investments, access to pension. This is when you're in the financial services sector. And all of us take this for granted because we have bank accounts. But don't and have to use partner plan, which we don't mind partner plan because we offer that too. But again, you don't realize the lack of access means that they're getting inefficient pricing. You know, some of these loans that they get at the rates that they get for the risk and for what they can afford, it's really wrong. And so let's at least offer access. Now, we believe that at some point the government will, you know, all governments in the region and probably globally will be thinking about how to make or move towards a digital society. And our government has been talking about that. In digital society to make sense, people will need to have access to the financial services sector. They need a bank account. So at some point, if they were to say all pensions paid through the bank account, then maybe it's good for First Global. Maybe it's good for Grace Kennedy because they can cross-sell into these accounts. There is a way to make money at some point. But the focus for us was how do we do it in the most cost-effective manner, as in no cost, as much as possible, to get these accounts up. And Sandra, that has been one of the, I mean, I went around making speeches about this because it was just so clear to me that this is what we needed to do as a sector. And that, yes, we shouldn't do it at a loss, and we're not. But it's not the point. That's not the question. You're not doing this to make the most money. You're doing it
for the greater good. It's the right thing to do. Let me ask you, how is it that yourself and the other institutions have responded differently to be able to open accounts for these persons who were considered unbankable in some cases, that you have had to change some of your criteria, relax some of the requirements?
Oh, that's so not the way in which the world is going. No, in all seriousness. So how were we able to open bank accounts for the unbanked? And why didn't we do it before? It's a great question. So the account opening requirements in the banking sector have been characterized as plentiful, onerous, etc. We understand. We hear the customer.
Your mother's baptismal certificate.
Exactly. No, I hear everybody on that. I do. I understand. And I understand why we need to essentially know you, because remember, we're trying to ensure only good behavior going through our sector, so to speak. What we've been able to do is classify these accounts as what we call basic accounts, low risk accounts. Why? Because they're restricted. Nothing beyond 200,000 Jamaican dollars can be transacted through the account. So as money is moving in, if it comes in and you get to more than 200,000 until you pull it out or whatever, the transaction will not go through. The accounts as well, the only way to get money in is that a government of Jamaica agency can pay in, a remittance company can pay in, and you can walk in and put cash into your account. That's it. In terms of getting money out of the account, you either go to an ATM or you swipe on a point-of-sale machine at a store. So you're not doing wires, you're not doing manager's checks, you're not doing all these fancy services. It's a basic account. And so because we've limited some of the services, the ones that we do have, we charge no fees, right? Even the minimum balance fee that would be on a regular account, we don't charge it on this account. This is to get the consumer to be comfortable working with the bank, comfortable about what it means to be a bank account customer. And then once you've done that, now let's say you want to send a wire or you want to do a manager's check. We say, oh, hello, Mr. So-and-so. We just need these additional information so that we can upgrade the regularized account. So that's where everything back. So we haven't relaxed anything. But what we said is, how do we de-risk the account so we don't need the same amount of information?
Okay. All right. No, I have to ask you this. With all that has happening, which means that the financial situation for most of your clients would have changed. You
Yes.
know, what clients are faced with now compared to the situation in January or February is very different because of the very stressed market environment that we all find ourselves in now. How is
Yes.
it that banks are responding and should respond to this new reality? Because the fact is that, you know, maybe the way how we imagined credit before and the credit platforms and the way how these things were packaged, we may have to go back to the drawing board and rethink that maybe.
Right. Okay. So there's a near-term response and there is the longer-term response. In the near term as a sector, right? And, you know, we take this so we're in close contact with our regulators and our boards so that everybody is aware about what we're doing. The two things that we have to manage through is ensure that liquidity is always maintained so that we have enough liquidity to run the business. There have been no issues, but that's one. And then two is on the credit risk side. So just ensuring that as banks grow, and we grow both on the core and non-core. Non-core is around spreads. You hear a lot about FX and how we make money on that. On, you know, payments, those are non-core, what we call non-core businesses. But for the credits, on the core side, I should say, it's very important for us to grow cautiously and to manage our portfolio that is trending delinquent or from delinquent to non-performing, which is after the 90 days.
Yeah.
Just ensuring constant contact with our customers. If a customer is struggling to pay and the impact has been because of COVID, we can restructure the facility, but it doesn't constitute a formal restructuring. Once we restructure that facility, then it's not going to go into non-performing until after COVID. Meaning, because of COVID, because it's a global pandemic, it's a worldwide impact, we're able to almost pause and delay, restructure. And then once COVID finishes now and the relief time frame has finished for what we've structured, then you need to be current. And if you're not after 90 days, we have to classify. So the management of the portfolio is important because we could almost, if you wanted, you could give everybody a payment holiday for 12 months, if COVID lasts for 12 months, but you can't afford to do that from a liquidity standpoint. So you're balancing to ensure you're meeting customer needs while meeting liquidities. And the customers, I mean, this is a countrywide and a global pandemic, but some sectors have fared better than others.
Sure.
And as a bank, always working to diversify your portfolio, not really planning for a pandemic, but planning for when one sector can go down, it has impacts on others, but what are some of the ones that are not as correlated so that overall the bank will be fine. We found that the travel, tourism, agriculture, events planning, bars and restaurants, I mean, those are the sectors that have been particularly hit. We see that it's the sectors that had to truly close down to manage the safety risk. So construction, which kind of stayed open, you kind of seeing that, you know, happen. That has continued a little bit. Manufacturing, even some distribution, you see those sectors didn't fully shut down. BPO, those sectors have been resilient. And so if you have that in your portfolio, then, you know, then you'll do well. What we found is that customers are less inclined to use COVID as an excuse. Every customer is trying to make their loan payments, but really protect and shore up their business to make it. You don't find customers saying, hey, bank, can you give me a break because of COVID, unless they really have to. And I think that's a testament to the maturity of all of us, of all the business owners, both SMEs, corporates, and even just the individuals or retail customers. I think that's a true testament to how seriously we've taken this and how we manage our money and our finances as a country.
Okay, excellent. Now tell me, Mariam, as we all are in this thing together, right? So we're all facing the same storm, but we are all in different boats, as I like to put it. You know, it doesn't impact us all the same way. In the financial sector, what are the challenges that a bank would face? So yes, maybe less deposits because the revenues have tanked in the sectors as you mentioned. is it that maybe the demand for loans would be less? What would be your challenges as you think about the targets that you would have and the changes in the business environment?
Okay, all right. Yeah, so there are a couple of challenges. So one is going to be around how you grow your core business. So where we would be doing, this, let's say disbursing $1 billion or two of loans in a given month. Now it's much more difficult to find businesses that can absorb a new loan and not have to ask for a payment holiday immediately. Yeah. So the growth of the core business has contracted across the sector, and that makes sense given what all of our customers are facing. The second challenge is going to be around managing your portfolio. So one of the things that we do in the banking sector is to ensure that we have good ratios, healthy balance sheets. Ratios are a way to indicate how healthy the business is, so like the balance sheet would be. And so an NPL ratio is a key ratio that all of us manage as bank leaders. That's one of the things we're held accountable for. Non-performing loans, if someone is delinquent on payments after 90 days, we have to classify, and that loan now becomes non-performing. And the ratio is obviously non-performing loans over total loans. So if more of your loans become non-performing, your ratio starts to go up. Mm-hmm. So the challenge is, how do you work with customers, given that you have to also manage liquidity in the background? How do you work with customers to support them through a period that you can't predict when it will end, to ensure that you don't have a spike in your loan provisioning, mm-hmm. but more importantly, NPL ratio. So NPLs in the sector has been around 2 to 3%, which is fantastic. Back in the FinSat days, they were got up to 9%, right? So 2 to 3% is where we are. We don't know, even something like a hurricane or even FinSac, right, which would have happened in 96, 97, 98. I actually did when I was in grad school, I wrote my thesis on the causes of the financial sector, because it was in 98 actually. But this one I was at Oxford. But the interesting thing is that we are in the middle of a crisis that you can't define the endpoint, at least with, say, FinSac, even though it was kind of horrible. You could unwind the positions and get a point of view of what the scenarios could look like and what that meant for your institution.
So it's harder to assess risk with so much uncertainty.
It's harder to assess risk now where everything is being impacted, mm-hmm. but the biggest uncertainty is the health risk. If you could say, all right, a month from now we'll get a vaccine and the health risk will go away. Yes, you can't tell when the country will get back to where we were before, but it's on its way back.
Yeah.
But right now, we can't tell that, and we have to just live with it and juggle the economic risk and the health risk as we try and continue to keep the country growing and on a sustainable path. So that has been the most. That's challenge number 2: managing your ratios, healthy balance, etc., etc. Challenge number 3, in terms of meeting the objectives, is just ensuring that as a portfolio, so number 1 was around growth, core business. Number 2 was about ensuring the portfolio doesn't deteriorate, managing your ratios. And then number 3 is always going to just be around your team and making sure that the team, as they're processing COVID, because there's no end date yet, that they stay motivated, focused. COVID is affecting people mentally in very different ways. For me, my struggle is homeschooling while actually doing this role. How do you ensure that you provide the support and you encourage the communication and you create an environment, and I feel very strongly about this, an environment that does not create disadvantage for some mm-hmm. groups of people, others, because of their personal circumstances. So how we handle that is that the team members are encouraged to come in and talk to HR. I have a tea time where anybody can set up 30 minutes with me and we just talk, so that we understand your background, so we can figure out what to do about it. As opposed to saying everybody must, if you're in this role, you must all be at work. Sometimes if you have a young kid, you're afraid to tell us because you don't want us to then think about you a year from now saying you're not so convenient to be on our team. I think that is just absolutely wrong. So creating an environment where people feel that we're understanding and listening to them and we're solving whatever their problem is, so they can get the job done, but they can manage their personal circumstance as well, is very important.
Okay. As you talk about the team, I need to ask you, the staffing and availability of staff, especially to deal with what I would refer to as some of the more complex roles. So yes, there
Yes.
are a lot of things that are digitized, but then your more complex transactions, and not necessarily transaction, but more complex FaceTime communication that a client or a prospective client may want with someone who has specialized skills and a specialized
Yes.
knowledge and experience and so on. How do you balance that? Because there are some things that people just feel, I can't do that online. I can't use a digital channel to do this. My situation is unique. I need to talk to somebody who's going to understand my situation. How do you balance the two? That is availability, staffing, safety, and just having enough people to go around when more persons now would have more unique situations to discuss.
Yeah, yeah, it's a good point. We have actually been doing quite a bit of repurposing, cross training, that type of thing. So we're building, I don't call it redundancy, but we're building people who can do multiple people that can do roles to take into account where the spike in the business has happened. So on the availability so we found the staff to be very available, actually. We have made it easy for people to work from home by providing laptops and VPNs. Those are the two things. Most had laptops, but that's what you really need, laptops and VPN.
Yes.
The risk is obviously the security risk, but that's why we have the VPN. But even just the environment, if I was doing this at home, there's a chance that my child could come into the screenshot right now, which is highly unprofessional. How do you ensure when people turn off their camera, but they're on these calls, that confidential information is not being shared? So the issue is really around, we've enabled people to work from home, but depending on people's circumstances, we've done quite a bit of repurposing, some cross training, and the team members are always up for that. It makes them better bankers to understand what another role is doing. It is feel purpose driven because it's what the business needs at this time, and it's temporary. I mean, we expect at some point to go back to something else. So take, for example, a sales team member. Sales doing well, helping to grow the business. Things are a little bit slower as it should be, right? You have to really defend your credits. But we have this product that we're working on to upgrade our system, let's say, and we need a retail salesperson's perspective. Now we can put you on the project.
That person.
In a way we couldn't before. And I've asked the team to think about it. So it's a constant conversation with the management team. I actually believe that these are the times when the organizations that have strong leaders around the table who communicate often can look for the pockets of information and know where the business is going to make these nimble decisions. You have to be really agile so that people, when you think about a problem, you don't say, oh, I have to go hire somebody. What about your existing team members?
Exactly.
People who are worried because their particular role has now gone. I'm a customer service rep and my branch has just closed for a number of weeks. Well, they could do calling tree. Well, they could help with there are things that they can do. And so I think it's important to ensure that all the team members are engaged. And part of that is also knowing their home situation. So the final point I'll say on this is that the leaders around the team our big approach has been around decentralizing that decision making. So each vice president runs their business and they have their team. That's how we think about it. And we come to the table and share the best practices and some of the complicated situations to get other points of views and to see how we put that out into our teams. So that has been helpful. And I guess a bank of our size is a little easier in some sense, maybe. But if the two things I say in COVID tests everybody's leadership. Leadership through a crisis or not. One is around this whole idea around how you communicate. Communication is, again, over communication. It's also listening. It's bringing people who have different levels and different backgrounds to the table to speak. Don't just allow them to not speak because of who's in the room. Try and get all the perspectives. I always learn from that. So that's one big thing, communication. And then the second thing is I find as a people, we're not very timing driven, like every time people speak, oh, don't worry, we're working on it. What's the target? Because even if you meet the target timing, if I have a sense of what your timing is, I know you're trying to meet some deadline, and if it has to slip, you communicate ahead of time for it to be slip. It's not something that we naturally talk about a lot we do it as a management team, but I think that we're such talkers. We talk a lot, we analyze a lot, but to actually really do, timing has to just be off the tip of your tongue for everything that you're trying to do.
But Mariam, I think though that one thing COVID has shown us is that we can act when we need to.
Yes.
Because everybody adapted so quickly. People were working from home, people were banking online.
People are going online, digital channels.
So we know we can do it. So things that normally take forever to assess and analyze until death, we know that we can respond faster.
Quicker. Yes, that's very true. Because the stakes were high. The stakes are high.
What about your call centers? How were those impacted? Did you have to, change the opening hours? Did you have more calls coming in? How was that?
Okay, so for our call centers, we increased the complement. So it's again, some of our sales team went over to our call center team. We increased the sales complement there. When we had the shutdown in St. Catherine, that impacted some of our members, and some of our team members, they're not allowed to take the equipment home. That type, not all call center team members can work from home.
Okay.
To address that, but when the lockdown happened, it made us realize that we need to cross-train more people, because when people have to be home, the call volumes have gone up, as mentioning. As people go digital, they still need to call in when there's an issue. Still more efficient, but we did increase our call center numbers. We also have our remote teller, which is the ability to talk to a teller, but it's not a real teller. The teller is on the phone, and we have a team sitting elsewhere serving the teller. And we have the hand sanitizer so they can wash the phone, etc. When they pick up the phone at a teller, they're speaking directly to a teller through the screen. So we beefed up that team as well, because we can stay open for longer hours for the remote teller center, because those machines are a security guard.
As we look to the future, what is it that financial institutions, especially banks, should be looking at as a new normal? Should we be thinking that, the human channel will still be in high demand? I mean, how are you viewing, what do you think is going to be the new normal?
I think payments, we have to solve the payments issue, how people can receive payments, whether it's small business, peer-to-peer payments, B2C, B2B. The payments is going to be a big piece of the game going forward in the new normal. I think digital, obviously, everybody said they're rolling out a digital strategy. Some will get it done well, some won't. Digital starts with the people, it starts with the culture. Digital is actually not about just the infrastructure. It's such a big piece around the culture, but digital is going to be another new norm for everyone. I think this idea around the public-private partnership, I know it's a little bit out of the sector, but it kind of sort of is. So as banks, we talk to governments, we talk to industry associations. If the manufacturing association is upset with us because of FX or fees, we need to be able to understand how we can explain to them whatever our point of view is and listen to what they're saying. So I think the new is this whole idea around partnerships and really listening. And as a banking sector, we certainly can't be over here and the countries over here. We have to be really working better to explain and to communicate and to listen to what our customers are saying. So I see that also as a new norm. As it relates to people certainly working from home and working, this is definitely going to be the new norm. It is more efficient. People feel empowered. They feel like they're being given flexibility and that we care. And I actually think it can be more effective as well. So I think the final point I'd say about the human channels. So there is a human element of leadership and how we deliver services and products. And I don't think that the digital channels are going to substitute for that.
Okay.
I think also, if you think about the segments of population, there are, whether it's older people or people who are not comfortable yet with banks, there are people who truly will not trust the digital channel as a preferred channel. And so I think we're always going to have that human element that's going to be required. And by human, I mean literally in person, face to face. So that's why doing it through agency banking, which is allowing a business in a community to offer banking services on your behalf, that allows people to come in and still speak to the bank, but you're not opening a big branch, as an example. So I think the human element is still going to need to be there. And when you have a crisis, or issue with your organization, you can't just solve it digitally.
Sure.
Meaning communicating and trying to explain and you apologize. Videos work, of course, emails work, but for allow people to come in to deal with something, I think in our context of Jamaica, I think is still going
Yeah,
to
that's
be
not going to go away totally.
totally.
I must put this on the table, Mariam. The concern, and you did touch on it, uh,
Please.
in my final question, what is it that Jamaica should be doing differently overall,
Yeah.
with the banking sector, as that, it's going to be a big part of that platform going forward as we digitize not just only payments of bills and so on, but in general, just how we do business.
Yes.
There is a
So
challenge about, the forex spread.
yeah.
That is a constant problem, and I have the same challenge as a business person. Why do I have to,
Yes.
why is the spread so wide? We think, something is not so right about that. Then we have the issue with, why are the fees so high? Isn't there
Yeah.
a cost of doing business that every business must absorb? Then why is it that we feel that we have to underwrite the bank's full cost of doing business? Those are some of the concerns that,
Yes.
first, and I'm sure you have heard the
Yeah.
complaint. And as
Yes.
we move forward, is this an opportunity to address some of these things as we try to lower costs? And so if it's cheaper to offer the services, then we would hope that we all benefit from that. So in the good
Yeah.
times, the banks benefit. So in the bad times, we expect that you're going to hug up some of
Partner.
the
Yeah.
pain too.
It's a partnership. So in the good times you benefit, in the bad times you're problem solving. But it's a partnership, and I feel strongly about that. And I think the sector, my colleagues do as well. Just to answer that first part of the question, and I want to talk about the banks in particular. The new norm for Jamaica, I'm going to borrow what the Minister of Finance said, because I think he sums it up very well. I see Jamaica, so I agree with him. I see Jamaica as moving towards a digital society. Right?
I like that.
Small open economy, we need to move towards being a digital society. And to be a digital society, every Jamaican needs three things, right? We need to be able to identify you. So you need an ID, right? That's one. Two, you need to have internet access, right? Literally, I mean, we didn't talk about kids and, education and all of that.
Yeah.
That's passions and, the inequalities that COVID-19 is showing up that we've all known about, and we all work within some way or fashion. But internet access is key, and not everybody in this country has access. And then the third thing is around, you need to have a bank account, right? A bank account where you are now formal, you can receive payments, etc. So those are the three things. And I think that I fully 100% agree with what he said. And I really think that COVID, we're already kind of on that path, but hopefully COVID now will accelerate. If we're already a digital society, we could weather COVID even better. I think we've done a good job as a country, but we could do even better. And so it's a way now to say, how will we grow and weather shocks in the future? Place to banks though. So banks, again, I see us as partners with our customers, partners with our regulators, partners with the government. We are very central to how an economy functions. And where we have misunderstandings or constructive feedback that is shared very strongly, it's widely held, the first step is that we have to address the feedback. I mean, that's just it. There's no other way to say it. We have to address it. And I like listening to people, and I like listening to when people have different points of views and trying to see where that disconnect is, and then seeing if you can bring everybody together. I like things. But on the 2 points you mentioned, I just wanted to address it very quickly, not in great detail. On the Forex side, I think there's a perception that the banks control or have a strong influence on the FX market because we're trying to make a lot of money and the spread is wide. The truth is that it depends. So if it's cash, what we will buy US cash at, let's say I've heard rates as low as 125 to 130. So we buy it at 125, 130, right, from you. So now we're holding US cash, and then we sell it at 140, and we get that spread. I hear that quite a bit. But here's the thing about the FX market. US cash is one channel, and then other channels are you get money in through wires. Other channel is, checks. Cash is very expensive. It's a very small channel. It's very rare that FGB receives US cash from someone. Very rare. And why is it so low? Why do we take off so much of that margin? Because once you come into the bank and you give me $1 US. You know what I have to do with that $1 US? I literally have to put it on a plane and fly it and lodge it to my bank account in the US. Every bank that trades in the US currency has a bank account at a bank in the US. And to get that cash into the account, you literally have to send it overseas.
But Mariam, what about the money that you already have in your US dollar account in Jamaica? And you are trying to access that, and it's so low again.
Okay, so let's talk about that. So the cash rate is the lowest, and it is quite low on the online, if you will. So it's your money, you already have it in there. The spreads are a lot closer. And that's why I think the dialogue is, because I look at what we do here, for example, and I know the way we make money is not on the spreads, we make money on the volumes. So if we buy dollars from, let's say, the remittance company, if we buy it at 141, we're selling it on at maybe 141.10. You know, if we can get that. It's not, the spread itself is not high. It's if we get that 10-cent spread on a lot of volume, then we book that thing called spread income, and we get that as income for the month. So that's why I just, you know, because I hear how it looks, because what is publicized is that cash rate, right? That's what you see when you go into the bank. We'll buy from you at 120 retailers. But the truth is that the majority of the transactions are not done on cash. And a lot of banks actually publish the spreads every day, you know. You can see what the actual spread is, but they make the money on the volume with those. And I think that's a key point. And I think we should be much more clear about addressing that head on, not just with our customers, but head on as an industry. I mean, to explain that, you know, not saying that it should be agreed to, but I think at least it would help to say that we're not making money just on trading the currency as much as it's on the volumes for that little bit of spread. On the fees, I think that fees should only be charged where they're justified, and it's really to cover a cost of doing business. I think the sector has come down quite considerably on fees. I think that there's certain fees. So I think we should penalize persons. We should charge fees where we're trying to discourage behavior. Only time that you charge a fee more than just cover the cost of doing a particular business.
I think that ties in, Mariam, to what we were talking about earlier, that it can't be just about growing the business and profitability, but, you know, it all dovetails back into offering real value and a benefit, and tying that back to purpose, as you mentioned earlier, because we want to feel that our institutions, our businesses have a soul. It can't be just capitalism with a straight focus only on profit, you know, at the expense of everything else. And I think that's the concern that some persons have.
Yes, and I even agree in the quadruple bottom line, which is people, profit, purpose, and planet, right? And I know I know it's not this conversation, but COVID-19 has thrown up so many lessons for all of us individually and just collectively, and you know, planet being given a rest, and then thinking about how do we really engage the planet going forward. That's a whole nother set of conversations, but I do believe that is also a very big point and lesson coming out of COVID-19.
I think this is a great point to just pull everything together and put a wrap on it. I mean, this has really been great. I mean, it's great to hear a banker talk about purpose and benefits and value, and not just spreads and, you know, the return on investment and, you know, the NPL and so on.
I mean,
but it's really nice to hear the other side, the human touch, that, you know, there is purpose, and we have nothing against profit. I love profit, right? But there must be more to it. I like what you said about the care for your staff, you know, ensuring that your customers are taken care of, they're getting the best service in the most efficient manner, you know, looking at restructuring facilities as much as possible so that people get some amount of relief during this time. That's really great to hear. Decentralizing decision making and so on. Really great again that everything doesn't revolve around a head office and somebody who has a senior sounding title. That's really great, but I think it's going to come back to the culture of the bank itself, how that is going to be rolled out. I thank you so much. This has been great, and I want to wish you and your team all the best going forward. And I am one of those who look forward to the fees going down and look forward to
continuing to go down.
a lower spread between what the dollar is being sold for and when I transfer money from my US account, what I pay. I look at it and I'm like, oh, I don't like that. But I understand what you're saying. I mean, more communication is always key. You know, persons, if we don't understand something, then the narrative that someone comes up with may not be the correct narrative at all. But you seem to have weathered the storm very well. I mean, 11,000 plus accounts and counting. I was very impressed with that. And, you know, it's really great. The three things that you say we need to move forward as a digital society, I could not agree with you more. We must be able to identify our people, and we must be able to have internet access. It's almost like a right, a human right. And you must have a bank account. Yes. Thank you so much, Marian.
Absolutely. Thank you very much, Sandra.
It was a pleasure. Bye-bye.
Bye-bye.
Bye.